welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka and Yatin Mota, who's all smiles given the fact that, it was a fantastic Friday for the bulls. In the afternoon, we were wondering if the Nifty will be able to shut shop above that 18,400 mark, but we are literally knocking at that 18,500 mark, which we of course did reclaim, during the intraday trade.
In fact, Nandita, if you remember, in the afternoon only we spoke that if the market is able to sustain about that 18,400, where we probably find a resistance, then in the second half we could see a rally, and that is how the playbook really turned out. So 18,500, and all thanks to Reliance Industries and ICICI Bank.
Up,
very strong momentum in both of these counters, and really 18,500 is here. And
as per Yatin's prediction,
it's not about prediction. It's about finding levels and short covering. Right. Yesterday we had the expiry, and Nandita, what happens is if we have a trending expiry and next day we open with a gap up, those gains generally tend to sustain. So that's what's exactly happened. In fact, they did not sustain; they rallied further. That is a good part about this Friday. That 18,500 is here, and Reliance and ICICI Bank, all of them smiling the way up.
And so are you all smiles this afternoon. But then let's talk about some of the sectors that were doing well. Of course, all the sectors were in the green. The FMCG pack, in fact, has hit a fresh lifetime high. And aside of that, you had metals, IT, media, all of these sectors doing extremely well. If you look at the Nifty gainers, we've already mentioned Reliance and ICICI Bank. We had Hindalco, SBI Life, Divi's Labs among some of the other gainers. On the losing front, few and far between, but ONGC, Airtel, Power Grid and Bajaj Auto were among some of the losers that we saw in today's session. Aside of that, some results came out in the second half. M&M reported an inline sort of numbers. Correct. You can say margins were a tad below what was being expected, but you can call it inline. And if you look at Sun Pharma, the US sales were far better than expected. Correct. Which is why the stock shot up after the earnings were declared. Z also, a relief rally came in for Z. It was up 6% when I last checked, given the fact that NCLT has set aside NCLT's order, which had directed bosses, both NSE and BSE, to reconsider its merger with Sony. So that has been set aside, and because of that, the stock was up 6% or thereabouts. A lot of action in the mid-cap space as well. Yatin, you want to talk about some stocks?
So, a lot of stocks today were moving after results. We had Naukri, which is InfoEdge. That stock moved nearly 10% intraday. After, initially dipping 2-3% after results, the stock surged nearly 7% intraday. Because the results were slightly weaker than expectations, but if you look at the billings and the overall internals, they were quite good. Obviously, because of the IT sector, the hiring business has slowed down. But if you look at the other segments like Jeevan Sathi or for that matter 99 acres, there is some good traction seen there, and other segments are also doing well. So as far as Naukri or InfoEdge is concerned, that stock ended almost 7.5% higher. We also have PG Electroplast post the results. The stock was up nearly 4%. A lot of result reactions, which I think Nandita will also speak about, be it Page Industries or be it MedPlus. All of those, in detail is what we, plan to cover today. But yes, Nandita, it was a clear day of result-based reactions, wherein a lot of numbers and reactions were on the wild side. And why don't you really take us through what happened to Page?
Well, of course, so this is what, in fact, Yatin has already revealed my cards today. Page Industries was the first stock on my list. Profits have literally halved compared to last year. Margins, of course, have already halved. Given the fact that it was the weak demand for athleisure segment that really weighed down on the numbers. And aside of that, they had a new inventory software update, which also had a bearing on the numbers. And although brokerages have maintained an overweight rating, the target price of 43,000 rupees or thereabouts, I'm talking about Morgan Stanley, it believes that the revenue growth may be impacted for the next 2 quarters. In fact, it's only some recovery in margin that could provide a cushion to earnings going forward. In fact, even Kotak Institutional Equities has cut its FY24, FY25 estimates by as much as 20 to 24%, given the fact that, the environment is pretty weak, demand environment is pretty weak, and as and when offices open, of course, people start focusing on outerwear more, and that's why the athleisure segment has taken a hit because of that. And aside of that, if you look at the valuations, price to earnings is at somewhere around 72.7, which is lower than the sector PE. And return ratios have also been pretty good. But given the fact that, the stock has fallen over 10% this year itself, analysts believe that it's not the time to, catch falling knives.
Right.
So any recovery in margins is something that could provide some cushion to financial performance. But first half is expected to be pretty weak for Page Industries.
Clearly, that is one stock which has been volatile usually after results, and we have seen some disappointment on the operating front for Page Industries along with the demand slowdown.
Yeah.
But what's doing well in the market today was MedPlus. Now this stock moved nearly 20% intraday after strong set of earnings. In fact, Investec has a buy rating on this one with a target price of 860. Despite today's move, obviously there is some value on the table. The best part about the result was that despite adding nearly 300 stores, MedPlus was able to deliver good gross margins, number one. Number two, if you look at the growth matrix also, it was able to beat the consensus earnings by nearly 15%. So yes, there was a positive surprise in the results, margins were good, and if you look at the profits, they were impacted by higher depreciation, because as you keep adding stores, the higher is the depreciation, but depreciation being non-cash, if you look at the cash operating profits, they have been growing smartly for this company. Recent IPO and a strong performance, and hence probably some momentum in trade today.
Right, but I think promoter pledge in this counter is a little on the higher side, so that could maybe be a cause of concern or something like that. But the other stock on my list is TVS Motor. This stock hit a lifetime high today. We had already spoken about this stock when it had reported its earnings. Margins were of course at record high at somewhere around 10.3% or thereabouts. Interesting part is that it has maintained that 10% level when it comes to margins for the last 6 quarters. And UBS has a buy rating, the target price of 1430 rupees a share, and UBS also takes heart from the fact that it has seen a sequential improvement in its margins despite its EV ramp up. Margins have not been eroded. It has maintained it, in a significant fashion. And if you look at the other brokerages, JP Morgan also has an overweight rating, with the target price of 1330 rupees a share. But the only glitch is the valuation part, given the fact that it is a little more expensive than its peers like Eicher Motors and Bajaj Auto. But aside of that, things going pretty well for TVS Motors. Let's see how the road ahead looks like.
And I think TVS Motors consistently has been delivering the operating margins. There was a concern, because if you look at Hero Motors margins, they had been in the range of 12 to 14%, Bajaj Auto upwards of 20%, and TVS Motor usually used to report margin in the range of 6 to 8%, which they have been able to inch up gradually over the past many years. So yes, they have been delivering what they are talking, and probably that reflects in the kind of valuation and upside the stock has seen in the past few trading sessions. Talking about LIC, that is one stock on my radar. Obviously, a lot of investors have got stuck because of the IPO, which was at a higher price. Post that, we have seen correction due to the Adani saga also. Stock is languishing around that 550-600 range. But if you look at Macquarie, they have an outperform rating on LIC with a target of 850. Now, if you look at this insurance giant's financials, the VNB margins and the APE, which is the premium collections, have been improving gradually. In fact, for FY24, the management is confident that they will be able to deliver a profitable growth, because instead of chasing market cap or instead of chasing higher amount of sales, the management really chooses profitable growth, and hence probably you could see some improvement in the financials for FY24. If you look at the company's strong VNB growth supported, it is due to the group business and increased yields. Also, if you look at their online presence as well as the dealership network, it has been steadily moving up. Obviously, versus a bank assurance company, you have your own channel to sell upon, because of which LIC has been losing market share to private sector insurance companies who have a bank parentage. But yes, the management is all geared up for FY24's good growth. There is an expectation in the market that the company will be able to deliver good dividends and bonus, because the shareholders have been unhappy post the IPO. So let's see how really the game moves up for LIC, especially the investments in Adani Group.
Yeah, it has hit 45,000 crores in a matter of 2 months.
Yes,
right?
so because there was a recovery in Adani Group stocks, the overall holding has went up to 45,000 crores. If I don't recall properly, but I think their Adani Group equity investments costing is close to 35,000 crores.
Okay, so that means they have recovered everything and they have actually
they are in profit. Yeah, they are in profit, and now since Adani Group has announced the fundraising plans, the stock should more or less stabilize moving ahead.
Well, all these factors I think are overshadowing the concerns over market share loss for the current juncture. We'll see how it pans out. But with that, I think we've come to the end of this edition of Closing Bell. Yatin cannot wait to get out of the studio and start his weekend, and so can I. So do I rather. But thanks a lot for watching, and we'll be back with the markets on Monday morning. So don't forget to tune in at 8:30 am. But for now, it's a goodbye. Thanks a lot for watching. Have a great weekend.